Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a fantastic day. We're taking a look here at Ethereum, seeing what's going on our daily analysis, picking up kind of where we left off from yesterday. This chart pattern here on the smaller time frames, I sent this out on my Twitter, Telegram, and Discord. We got a rising wedge and just started forming a double top here as well. So that's typically a bearish sign. Doesn't imply it's going to just drop like a rock, but it does tell us that we should be able to see these lower fib levels retested. Okay, so just bear in mind, we should be able to see this happen in the near future. I'm comfortable with our short position we have open with Ethereum. We're slightly in the red right now, and that's just kind of the way that it works. But I'm not too worried, honestly. I'm mainly not concerned because I feel like Bitcoin printing a double doji candle on the daily, we're looking at a potential likelihood of a further decrease here from this coin. So just bear in mind, we're going to look at that and obviously a little bit more. So if you're new to the channel, not a financial advisor, love to teach people to trade. I hope you can learn something here today. If you do want to become a better trader though, cryptocash.tech is a site linked down below where you can learn how to become, just more consistent. I have a trading academy community and of course some signals that I send out through my Discord here, of course, and Telegram. Obviously, we took some nice profits from BNB and OGN last night, and our VRA trade here so far today is up 20% in 2 hours. So awesome stuff there. Be sure to check that out at your own time, obviously, and Twitter, Telegram, and Discord if you want to see the results, of course, for last month. I post those frequently. All right, so what we want to do here is talk a little bit about Ethereum and see kind of what's going on. We've got a red doji candle here forming. Well, not a doji, but just a red candlestick nonetheless. So today's might actually close lower than it opened, which is normal in this situation, but we have a lot of candle wicks down here. So let's talk about that. First things first, actually, why don't we jump into this here? There are some upper liquidity levels, so that reminds me here to kind of touch on a few things with the backend data. And so truth is we have significant amount of longs here leveraged at about 1700. Okay, so those are the leverage amount for the most recent longs. So basically, if the price comes down to 1700, just know that it's going to push down a lot faster and quicker because again, we got a lot of leverage at that level. Okay, now as we zoom in here, we can see yesterday we had a lot more, not a tremendous more, but a lot more shorts than longs getting liquidated. That's pretty standard. We can see that retail is more active than whales here today, which is actually a good sign. Because oftentimes whales are very quiet when the price gets overextended. Makes sense, honestly. They kind of steer clear and let the retail take over. If we take a look here at the shorts, let's go ahead and double check this here. You can kind of see actually more so where the longs are at here. And this is open interest, just kind of letting us know where the longs are at. They're at about somewhere in the 1830, 1817 range here. Now, with the price action being upwards of, so what we're 1899, I don't think this is updating here effectively. Let's go with a larger time frame here to give us better perspective on things. There we go, that looks a little better. We do have some late longs at about 1890, that's break even. Majority of the longs though are in profit. They're at about 1817, so that's good. That really kind of tells us that that low 1800 mark is somewhat of a support based on just kind of the aggregate amount of longs. We have some late shorts here entering the market at about 1900, so that makes sense. All in all, pretty straightforward. I can totally see that being the case there for ETH. That kind of just helps us understand quite a lot, honestly, just letting us know, roughly where we're at here. Let's take a quick look at the heat map here for the last 7 days, though, just kind of see where we're at. Because we got a decent amount of liquidation levels here, so let's make this a little bit more viewable here for you. So most amount of liquidation for this coin is about 1770. So it hasn't changed much since this morning, but there are starting to get a little bit more liquidation levels at 1960, 1950 range, and those are more shorts entering the market. So we have more shorts now than we did earlier today, which makes sense. Again, the bias is shifting from bullish to bearish. Again, I'm not saying that price is going to just drop hard, but there's more people convinced that the price is going to drop. All the more reason why we could very well see a short squeeze too. You got to recognize that the market movers are pretty aggressive when they see those things too, because they can see these things just as well, and they're paying close attention to the order books. Either way, just to note, we have a fair value gap and some liquidity up here at the range of about 1978 upwards of about 2050. So we could very well see some price action moving up in the next few days to that level. So don't write off Ethereum just yet. Honestly, it's still quite strong. It's up over 70, but the money flow index is still high, at least on the daily. Keep in mind, it's an average of 14 days. Okay, so keep in mind that that's coming down. So you could approximate the last week has been less volume than the most previous week to that, which we can see here, of course, a lot of volume previous and the volume's tapering off. Again, this volume's still good. It's just not quite where we want to be in order for the price in action to continue higher. We need to see more volume, of course. Big surprise, more volume, more price action, right? So let's take a look here. We can see a significant support right there at about 1800. We've already identified that most liquidations at 1770, so those are fairly safe, and that, which kind of leads me to believe that if the price does come down, we may not see a massive drop. We're probably going to see somewhere in the range of 1815, 1830, or 1850. Those are three potential ranges there for us. So all in all, not terrible to know that those are good support levels. In most cases, though, when you see like a lot of volume here, obviously this is the lowest point. But if you look at the most recent high here, these areas right here will provide a lot of support. So my speculation is 1850 might be a better case scenario, unless Bitcoin has a really bad day or a really bad week. And then in that case, we're going to see a little bit more of a correction from Ethereum. You got to remember, traditionally, and this holds true even recent, Ethereum sells off at a 2 times rate than Bitcoin does. Okay, so it's twice as aggressive to the downside than as the upside. Actually, correction, it's also 2x to the upside as well for the most part lately. It's been very strong, but it sells off quite aggressively when Bitcoin does too. It has to hit that certain threshold though. If Bitcoin doesn't come down to the low 34s, then we probably won't see much of a correction from this coin. We take a look at Ichimoku Cloud. We're above the cloud, which is good. We got that support, but conversion line, baseline, intersecting, and of course the lagging span is not free anymore. So really just no sign to take a long position. If you're taking a long right now, I think that's a terrible idea. Try not to be a breakout trader. They're I wouldn't say super unsuccessful. They're just less consistent, and they're going to report massive gains, but they're also going to report pretty significant losses too, because they put all their eggs in one basket, if you will. Okay. Be careful. Wait for confirmation if you're going to take a trade. There's no confirmation here letting us know that it's going to continue higher, minus the fact that it keeps retesting upper levels, but it swept a lot of previous liquidity and even swept the most recent one. So I'm not really super convinced that this coin is going to fly off the charts. Okay, so just be mindful. If it does, though, it'll be the first thing to identify alt season. So if Ethereum starts going crazy hard and Bitcoin just kind of stays the same and comes down, we're going to see some pretty massive movements from altcoins. Just be mindful of that. All right, well those are my 2 cents there. Hopefully that made sense and I was able to clarify for you. And if you learned something here today, comment below, like, subscribe, follow. Greatly appreciate that. Helps us grow the channel. Also, again, Twitter, Telegram, Discord, if you want to consider following over here. It's really cool news updates, as well as the fact that we all have a good time. We can communicate together too. It's good stuff. Be sure to jump on over there. I hope you have a great rest of your day, though, either way. Thanks so much again for watching. I look forward to seeing you all in the next video. Oh, sorry, one last little piece of advice here. Check out this Blofin exchange. It's a new exchange I partnered with this month. Mainly, they're available, or this benefit is available till November 20th. It's a really cool exchange. Honestly, they're fairly new, but they're post FTX and they're a really good exchange. So just recommend checking them out. See if you like it, and if so, it's a good alternative. No VPN, no KYC. That's the main reason why we're partnering with them. Trying to bring more US-based exchanges, or at least non-US based exchanges, to the US, so you can have more options, because leverage here, we're pretty limited, unfortunately, in the US and Canada. Hope you have a good one. Thanks again for your time. See you in the next one. Take care.